What's up guys, welcome to another video. Today is going to be a different type of video. We're actually going to be going into one of my portfolios. This is actually my Roth IRA with Vanguard. I've been contributing to this portfolio for about almost 3 years now. And if you didn't know, with the Roth IRA, it is a tax-deferred retirement account, which means the funds that you contribute into this account, basically your investments grow tax-free. But the caveat is you cannot withdraw your money until you are 59 and a half. And if you decide to withdraw your money from this retirement account, you will get charged a 10% penalty, as well as you have to pay taxes on your capital gains. But for the long term, it's a very powerful account. It grows tax-free. So let's jump into what I am holding. So I do have 2K in my money market fund, which is just cash sitting here. It's not in any investments. Let's go into my funds, my ETFs and stocks. So I'm holding VTSAX, which is the Vanguard Total Stock Market Index Fund. It is equivalent to VTI, which is the Total Stock Market ETF. But the reason why I'm choosing the mutual fund is because you can do fractional shares, whereas in an ETF you have to buy whole shares, at least in Vanguard. Another benefit with this in the Vanguard brokerage is I can continuously do reinvestments into this fund. So I set it up so every week I contribute $50 to this fund, and that's been working out really well. The reason I do that is because of the concept of dollar cost averaging, which is basically buying the highs and the lows and not really timing the market. You're just having a set schedule and continuously adding shares to this fund. So this is my largest holding. I have about 10,000 into here, which makes up most of my portfolio. So let's get into the ETFs. The first ETF is VUG, which is the Vanguard Growth ETF. And like all ETFs and index funds, there are an expense ratio, but Vanguard ETFs tend to have a lower expense ratio than others. So I have about 7 shares of this, which is almost $2,000. I really like this ETF because unlike the total stock market index, this ETF focuses on growth stocks. So it has a higher risk, higher return, and so far it's performed pretty nicely for me. My second one would be VYM, which is the Vanguard High Dividend Yield ETF. It does have a low expense ratio as well. And this one, the price of this ETF doesn't really fluctuate that much. But in return, the good news is we get a very stable and high dividend yield. So what I do is, for all my dividends, I just set it up so I have it reinvesting into the same stock ETF or index fund. So for my next one, we have VTV, which is the Vanguard Value ETF. It is kind of similar to the High Dividend Yield ETF. The Value ETF contains value stocks such as Coca-Cola, Pepsi, Bank of America. Very stable stocks, so the price doesn't fluctuate that much. But in return, we do get some nice dividends from this ETF. My next two ETFs are ARK ETFs. The first one is ARK-KK, which is the ARK Innovation ETF. Second one is ARK-W, which is the next generation internet ETF. These are pretty similar, but overall what ARK is trying to do is they invest in disruptive technology. So technology that they believe will be big in the future, but are currently trading at a low price. Because it's an actively managed ETF, we do have a slightly higher than normal expense ratio. And I don't have too much shares of this. I have about 1K equity in both combined, but these ETFs have probably been my top performers in my portfolio. So now we're getting to my individual stocks. I don't have that much stocks yet because you can only contribute 6K per year due to the Roth IRA contribution limits. I plan on adding more individual stocks in the future, but so far I have a few tech companies: AMD, Apple, Cloudflare, Microsoft, and I have this Dave & Buster's play, which I bought pretty low at $14 a share. It was more as a riskier investment because I wanted to play the just a reopening stock. I believe like Dave & Buster's got hit really hard by COVID and they are trading at a low price. It's pretty risky, but so far it's recovered nicely and almost doubled in price. So my portfolio value is 18,000. So far I've contributed 15,000. So I still have 3K left for this year to contribute, and of course 2K is sitting in my market fund. What I like to do is I don't throw all my money in at once. I like to schedule it. So as I mentioned earlier with the total stock market index fund, I like to invest weekly. So every week I have it on a set schedule, contribute $50 to this fund. Now I only do $50 to this fund every week, so I do have leftover cash to do in other ETFs or stocks. So every month I would just choose one of these stocks or ETFs and add another share to it. That's about it. Thanks for watching. If you want to see more portfolio reviews, I have other brokerages in Fidelity for my 401k and Robinhood with a lot of options plays. This is just one of my smaller portfolios, but because there's a contribution limit to the Roth IRAs. All right, that's about it. Thanks.